Today I want to talk to you about an often used technique in investments and financial planning called tax loss harvesting. It's also referred to as tax loss selling, and it's a process whereby you would sell a security, a stock, a mutual fund, an exchange traded fund to net a capital loss on that holding. You would then use that loss to offset future capital gains to make a more advantageous tax situation for yourself. You can offset short-term losses with short-term gains and long-term losses with long-term gains and net them together. You can also use a maximum of $3,000 in capital losses in a single tax year to offset ordinary income. Any excess losses on top of that you can carry forward indefinitely to offset future gains and income. So it's a very important technique in financial planning to help clients minimize their tax exposure. You also have to be careful of the IRS 30-day rule, where if you sell a security for tax purposes, you cannot reacquire it for 30 days. Now, two options: you can leave the money in cash, but you run the risk of the stock market going up over those 30 days and you missing out. The other option is to buy a similar security. It can't be what the IRS defines as substantially identical. So let's say you sell a large cap stock. You could then purchase an ETF or exchange traded fund that represents large cap stocks to hold for 30 days. After 30 days, you then sell the ETF and reacquire the stock, so you have been in the market that whole time and not missing out on any potential gains. So typically, this is a year-end process that money managers, financial advisors go through to offset any capital gains that will be coming up at the end of the year. We suggest that you do this proactively. You don't sell every single time you have a loss or a small loss on a holding. For example, this year though, we've seen extreme declines in the stock market. Most major indices down well over double digits, and most individual securities down significantly. So you take this opportunity to be proactive, take advantage of a bad market in the middle of the year, sell holdings that have significant losses so you can build up those capital losses. It also allows you an opportunity to potentially rebalance your portfolio, overweight some areas that you think are going to do better coming out of the downturn, and then you use those losses to offset future gains. Great technique in financial planning, great technique that accountants will usually applaud and encourage you to do. But in fact, a lot of advisors do not do this proactively, certainly in the middle of the year. It's just kind of on autopilot. We do it at the end of the year. We suggest being proactive, talking to your advisors, and using downturns like this to your advantage. We hope this was helpful. Thank you for listening, and make it a great day.